Hello, what's up guys, Profit NH over here, and I hope you're doing great today. So today I want to teach you a very simple strategy that you can use either as a beginner trader or even as a professional trader to understand the market easily and be able to profit out of the market, guys. So I know most of you have come across terms like demand and supply, support and resistance, trend lines, continuation patterns. We are going to use this simple information to analyze the market and to understand what the market is doing, guys. And I'll show you how you can use this simple information to be able to find your entries easily in the market, guys. So the first thing that you do as a trader when you open your charts is you try to understand what the market is doing. You try to understand whether the market is on a bullish trend or the market is on a bearish trend. So for instance, today I want us to look at gold and try to analyze gold, and using this simple information we see whether we can find our entry in gold. And actually I'll take some of the entries in gold because so as you can already see, I'm on gold on the daily time frame. So normally before you try to find your entries in the market, you go to the bigger time frame and try to understand what the market is doing from the bigger time frame before you go down to the lower time frames and look for your entries, guys. Why do we normally use the bigger time frames to find our entries? We normally use the bigger time frame because from the bigger time frame the market tends to give us a bigger perspective of what the market has been doing, maybe from the previous week or the previous month. So we can use that information and try to see and try to forecast what the market is gonna do next, because we only judge or we only react to what the market is giving us, guys. So as you can already see, I'm on a daily time frame. I want to understand what this market is doing, and what I'm going to do, I'm going to use these trend lines. I'm going to use these trend lines to understand the direction of the market. So I'll just draw it just like that, and the other one I'll just draw it from here. I'll draw it from here to this area. So when you look at this market, guys, this market is trending upwards. And how do we know that? Because as you can already see, these trend lines is showing us that the market is moving upwards. So when you see a market is moving upwards, that's a bullish market. And in a bullish market, we normally look for buy entries, guys. We never sell, or we never sell in a bullish market. So after understanding now the market is giving us these bullish structures, we go down to the lower time frame and try to see what the market is doing there. But before we go down to the lower time frame, we have something we call trends inside trends, guys. So in this trend, in this uptrend, we still have these small still have these small trends like this one. The market gave us this one. It's still an uptrend. We had these. I had this one. So these are what we call trend lines, guys. So as you can already see, this market was giving us these bullish structures, and when you look at this kind of structure, we normally call this an impulse. Then this correction we have here, this we normally call this one a correction. So after the market giving us an impulse, it normally gives us a correction, then it will give us an impulse. So in any trend, guys, you should understand that when the market is either buying or selling, it gives us these kind of structures. We normally have impulse correction in either trend, apart from when the market is on consolidation. When you talk about consolidation, that's when the market is moving sideways and it's not giving us any kind of clear trend. So after understanding that this market has been giving us this impulse correction, and right now we are on a correction. After having this impulse, we had this correction. So what do, guys? We go to the lower time frame and try to understand from the lower time frame where we can be able to find our entries. But first of all, before going to the lower time frame, we'll try to see identify these key areas from the bigger time frame. Then we go to the lower time frame and see what is happening there. So these key areas that I'm drawing here, these are what we call support and resistance. So we had these key areas here. So for instance, at this point, when the market is above this area, we call this a support area. We call this a support area. When the market is on this area, we call this a support area because, yeah, we call this a support area. But after the market has broken above this area, when the market is on this above this area, we call it a support area. Then when the market is below this area, we call this a resistance area. So for instance, in this market, this is our resistance area up here. This is our resistance area up here. So we first of all mark these key areas from the bigger time frames. I'm marking mine here. Just like that. Then now we go to the lower time frame, and for this case we are going to the daily time, to the 4-hour time frame and see what the market is doing there. So as I already told you guys, the market normally moves in 3 circles. The market normally moves in an impulse, correction, and impulse move again. So after you've seen that the market has already given us an impulse move, that means that there is a possibility that this market will give us a correction before it continues pushing to the upward. So for this market, I'm just going to draw the most relevant key areas that we are looking for at this point. So I'll just adjust these ones. And we only delete the rest because I won't be needing the rest just for the chart to be clean, like that one. Then, as you can already see on the 4-hour time frame, if we try to interpret what is happening here, this market was on a bullish trend. Then this market gave us this impulse move. We had this correction around here. Then we had this impulse move. So right now what is happening, we are having a correction from the bigger perspective. So because we saw from the daily time frame, still we have a correction. And how do we use this information now to understand or to know what we're doing in the market? When you look at this kind of structure up here, this is what we call a bullish flag. This is what we call a bullish flag. So let me draw it so that I can show you. And whenever you see a bullish flag, that's some kind of continuation pattern, guys. So if the market was going upwards and it starts giving you this kind of structure, you automatically try understand that this market is giving you a bullish flag, and that is a continuation pattern. That means that the market will continue pushing upwards. So this is what the 4-hour time frame is giving us. This is what I'm getting from this 4-hour time frame. Actually, this is not a bullish flag. A bullish flag normally happens when this market is just like this. But this one, we call it a bullish pennant. And actually, a bullish pennant is still a continuation pattern. So whenever you see this market, whenever we are on an uptrend, then you see this kind of structure, you automatically know that this market is still pushing upwards. So let's go to the 1-hour time frame and try to see how we could have taken these entries in this market, guys. So let me go to the 1 hour time frame and show you how we could have taken these entries and what are some of these key areas that we should be looking in this 1 hour time frame. So you just make sure you draw these lines just clean, nice and clean, just like that. Then this bullish pennant, just make sure it's nice and clean and it has all those touches. So from the 1 hour time frame, let's try to draw these bullish, let's draw these key areas. I'll just use my rectangle to draw this area above here. That was my area of interest, above that area. So yesterday the market did broke above this area. After the market breaking above this area, I've told you guys, after the market giving you an impulse, you should expect the market to give you a correction before it continues to push to the direction that is moving to. So for instance, in this market, the market did give us this bullish structure. It gave us this impulse move. It broke above this pennant with this impulse move. Then after I saw that the market has broken above this area, then I automatically knew that this market is bullish. And that means that when you understand that the market is bullish, you should be looking for only buys in the market, guys. So after this market breaking above this area, I was expecting this market to give me this kind of structure here. This kind of structure. And I've told you this kind of structure is called a bearish. It's called a correction. So after the market has given you that impulse move, then yes, you expect that correction. Then let's see how we could have taken our entry around this area, because you can already see this area down here. I've told you this is our support, and this area up here is our resistance area, and this is our key area. These are an area that you should be looking for. So at this point, how can you be able to take entries in a market like this? So the first thing that you should do is you go down to the lower time frame, because this one is not so clear. We have already understood that this market is giving us that correction. It's in a correction, but it's still not very clear. So you cannot take your entries at this point. So the thing that you do is you try to go to the lower time frame and try to understand what the market is doing there. So let's draw this one. Let's draw this trend line just like that. Make sure your trend lines are very clean and you have these clean touches, guys, and don't force any trend line. Just make sure you have as many touches as possible. Just like that. Nice. So this market is giving us so from the 15-minute time frame, you can already see that this market is telling us that it's on a downtrend. But when you go to the bigger time frame, the market from the bigger time frame is on an uptrend. So we normally ignore the smaller time frame, but we still use it for entries. So we still use this smaller time frame for entries. So how can we enter in a market like this? So in a market like this, we normally wait for this market to break above this correction area or from this small trend line. Then after breaking above this small downtrend, now we can take our entries. So for instance, like this market, we'll wait for it to break above this area. Wait for this market to break above this area. Then we take our entry at that point. Then maybe our stop loss will be just right below here. And our take profit one will be at this point. that's about 100 pips. Our take profit 1 will be there, our take profit 2 will be around this area. That's around 277 pips. So never take entries when the market is still in this area, because you never know, the market might go down because there is nothing stopping it from going down. The market might come down to give us a double bottom down here. It might come down, give us a double bottom down here before it continue pushing upwards, or it might even break below this area. It might even break below this area and continue pushing downwards. So in this case, what I normally do is I normally anticipate the market to give me either of these structures. So if the market does break above this area, that means what I was waiting for has been confirmed. So I'll wait for the market to give me, I'll wait for this market to give me something like this. Let me show you guys. I'll wait for this market to do something like this. After the market breaking above this area, I'll wait for this market to give me a retest. Then after giving me a retest, I'll take my entry, then I'll take my take profit 1 at this point, because this is another key area from a smaller time frame though. So you should not ignore it. Then it will do something like that, because there are normally people who do sell at support and resistance. At resistance. So wait for these guys to be taken out probably. Then the market will continue pushing upwards. Then does something like that again. Goes up, takes out the guys that had already sold. Then it continue pushing upwards. So in this market, if I'm trading this market, I'll wait for this market to break above that area. So for instance, right now, I'm going to wait for this market to break above this area. Then after breaking above this area, I'll take my entry here, and I will record all my entries, guys, and I will show you on the next video. Then if it does this for this market, I'm expecting it to continue going up, because from the bigger time frame, it has already given us those kind of bullish structures, which means that this market has a higher potential of continuing going up, guys. So if the market does break above this area, which means our next target will be up here. This will be our next target. This is another key area. This is another key area, another resistance area, this one. Then let me show you the final target. The final target from here will be up here. This will be another key area. Then the final target will be here. This will be our final target. Then after the market has come already all the way to this area, now we will start looking for maybe reversal patterns. If it does give us reversal patterns, we'll be looking for opportunities to sell. But if it doesn't give us any kind of reversal patterns, then which means it will continue pushing upwards. So if that's what is going to happen, still we are going to look for more buys in the market. So that's all about today, guys. So this is Profit MH here. I'm signing out. See you in the next video, and thanks for watching.